Trading is a lonely profession. This is something that you would have experienced because most who watch this are either full time traders or almost full time traders. But over the last year, last 6 months, I have made a conscious effort to communicate what I have learned over the years to people in the most effective manner possible. Where my definition of effectiveness is that I will not pay in order to communicate to people. And if at all, I should stand to gain something if I am communicating with people. In today's video, I would like to share one such message through which I think I have gained a lot, and I believe even you might gain quite a bit. These are one of the perks of coming on social media and presenting your topic in an organized and a structured manner, that individuals who are confronting the same problem can relate with the efforts that are made. And because of the structure of YouTube, there is um, there is a lag between when a person sends the message and when I actually receive the notification. And very often, I do not receive notifications of all messages. And I only see them several weeks or months later when I am checking the dashboard more thoroughly. Even then, I try to make an effort to reply to those messages. And I will explain why I do that. Trading is by far one of the most toughest professions that an individual can actually undertake. It truly is extremely tough. And there are moments as a trader where you seriously need just someone to say that things will be okay. And what I don't understand is that when we as traders pay for awareness campaigns in our contract notes, you would see that that SEBI deducts certain money in order to educate traders. I don't understand how is there no framework in order to protect traders and counsel traders. As even the YouTube data shows that the majority people who actually watch my videos are just 30 to 35 years old. Surely such individuals are at the cusp of their career, and what they're looking for is an advice on their career. What is the plan if they succeed, and what is the definition of success? Is it only just money? And how does one plan in the event of failure? What are the consequences of failure? I find it surprising that there are no forums and no portals despite individuals spending so much of money. And these risks are known to us. Every few years, we hear of incidents where people have done physical harm to themselves because of the pressure that leverage trading creates on the individual. And just because the stone breaks on the last shot of the hammer doesn't mean that the first 100 strikes of the hammer were useless. You see, this toll is created systematically. I have met countless traders who have made some money and then lost it and then made some again, and this process is continues back and forth. But I have always tried to communicate that every time you make a profit without adhering to strict trading rules like setting up a clear stop loss, placing that order, determining the quantity, having clarity on the direction in which you're going to trade, having clarity of when you are not going to trade. If without the understanding of these things you have made a profit, then I seriously pray that such individuals lose that profit very quickly as soon as possible. Because if they are to continue this for 3, 4, 5, 7 years, then the damage this poor trading behavior is going to have is going to be catastrophic. In other words, my point has been that profits made without adhering to standard, well defined trading processes is a setup for a future catastrophe. And in that context, I would like all the traders who are present and watching this to look at their losses as a feedback to their technique on trading, and not as a feedback to who they are as individuals. The other day, I was talking to a colleague of mine, and a topic came up, and in which we said that the only person who looks at getting punched in the face in a positive manner is a professional boxer. For any one of us, you, I, if we were to be punched on the face, we would feel assaulted. We would feel that our space has been invaded. We would feel like victims. Whereas a professional boxer or a professional wrestler, a pugilist as they say, would be the only individual who would look at that as a feedback on their technique and would go back and improve on it. So even if you set up on the journey of being a Olympic gold medal winning professional boxer, there is obviously a 99.99% chance that you're not going to get there. But there is a 100% chance that you're going to get punched on the face in the process of getting there. And even the best boxers, whether it is Mike Tyson or anyone, they will vouch that they have taken a serious beating in their life in order to get there. Similarly, I'm very, very confident that the best traders would have taken a serious beating in their life. The only question is, when did they get it? Did they get it in the first year, the first month, the third year, the 10th year? And in this, I always hope that if someone has to experience the downside of trading, it is best if it happens as soon as possible. Because it is at that time your overall capital, and not just capital, your overall commitment of time is the least, and the opportunity cost is the least. Anyways, I would like to talk about the comment that was shared in one of the videos. I think it is by Ritik Kaushik. And the reason why I am sharing this comment is because it is just absolutely beautifully written. And I feel that it truly, I do not know if it is AI written, but such a person who can write like this on a YouTube comment should seriously consider writing other things. This is definitely the output of an individual who's typically well read and above average IQ, I would think. So let's see what he said. Here he's mentioned that I started learning and trading in December 23, which is not very long back. And over the past year, I have spent countless hours in this endeavor. Coming from an unstable financial background. Now, individuals who are coming from an unstable financial background are just as likely to be successful traders as I am likely to be an Olympic swimmer. We just have to accept, we have to act our wage, just like how we have to act our age. So, success in trading is directly correlated with the health of your personal balance sheet. And if individuals are coming with this instability in the financial background, trading for you will just become 100 times more difficult, and there is little to nothing you can do about it. I hate to say it, but in its current form, because you have joined on December 23, at the time you have joined, unfortunately, trading, at least in the NSCFO market, is only an endeavor for the rich, or at least upper middle class, or an individual who have more than one income sources. They are the only individuals where there is legitimate justification for pursuing this particular business. It was not always like this, but like I mentioned in my previous videos, that the phase that started from 2021 were by far the worst phases for the profession of trading, and almost all of it have been forced on to the traders because of SEBI interventions, which in my view are which, based on my limited understanding of the subject, are totally unfounded and have no place here. And they will force the best traders in the country to sooner or later leave and trade international markets. It is bound to happen. But anyways, he further mentions that I saw trading as a way to achieve stable income. So here I would like to say that instead of trading as a stable income, perhaps better is if the individual viewed it as a speculative income. In that case, the definition would be better. However, like many others, I face the harsh realities and challenges of this promising but difficult field. And this is very true. It is promising and it is difficult, which is part of what makes it beautiful. One key takeaway from my year of experience is understanding why people, particularly myself, choose to trade. Like everyone else, I believe that my intuitive thoughts are strong. I can read charts, analyze patterns, and predict what might happen. Predict what might happen is something that all of us can do. We just have to understand better that we are likely to predict with what accuracy. So we want the accuracy prediction, and the next thing that we want is the distance. That is, once we have predicted something, how far does it go? And in my view, this is a mathematical framework driven approach. So anyone can predict something, but we need to get into the specifics of our predictions in terms of its performance. And there is fortunately a lot of work done in the science of decision making, in maths and statistics, which we can use in order to create samples and models for ourselves to help us take these decisions better. I have personally outlined what I use in the course descriptions that you have seen, which I will talk about perhaps sometime later. However, throughout this journey, I have realized how foolish I can be. So this feeling of being foolish is natural, because when someone loses capital, this is how your body is going to feel. For example, when we are euphoric, we are obviously secreting dopamines, but when we are feeling sad, I'm not sure, but most likely we are secreting cortisols. And you see, when sorrow is triggered by a chemical reaction, then sorrow in itself has phases, which would be indifference, or it could be a certain sort of disconnect from that. And then it could later on be you individual exaggerate that experience till finally it ends up to trivializing that experience. I'm not a psychologist, but I'm sure that there is a pattern which even sorrow or defeat follows. So this, yes, how foolish I can be, but then this is my point, that it's not like you're committing a crime. You're doing a perfectly legal activity, and you have your own financial best interest in mind. So the decision should not be what makes a person foolish or not. It is basically how you behave. So, for example, I cannot be called a foolish person simply because I drive a car. But if I start rash driving, uh, potentially harming myself and others, then yes, of course, I could say that. So, the reason why I stop here is because my experience has taught me that no one is really going to be kind to you, and individuals, particularly traders, should learn to be kind to themselves. They should understand that they were trying their best and it just didn't happen. It's okay. Be kind to yourself, and let's make a plan for the future, is what I would say. This is fine. Means castigating yourself is normal, it's natural, but we have to learn, or at least that is my advice to individuals who feel like this in some way, that try being kind to yourself. My ego and confidence, disguised as intuitive thoughts, often came into play while trading and destroyed my trading account. So this is actually very well written. My ego and confidence disguised as intuitive thoughts. This talks about a certain level of awareness, because literally this person is articulating to me what I have felt during sort of my own internal dialogue, that am I really good, or am I just fluking this out, or am I really bad, or was I a victim of circumstances? And my entire work over the years has been to somehow develop a framework around my intuition. So I truly can relate with this. I really found when I read this, I was like, really, can someone write so well? Anyways, in one of your videos you discussed who should get into trading, and it really opened my eyes. This video that the person is mentioning could have been something I created years ago, and I will talk about that subject perhaps later sometime. While I'm struggling to cover my basic expenses. Now, if you're struggling to cover your basic expenses, with all due respect, you simply don't belong here. You don't belong as an active trader. Active trading as a career is about as useful for you as me pursuing Olympic swimming as a career today. You are not always going to be in this situation. Let's be clear that this stage where you're finding it difficult to meet your basic expenses, this is not going to be forever. Maybe in 3 years, maybe in 7 years, maybe in 10 years, you would be in a position where meeting basic expenses is not so much of a concern for you anymore, and maybe growth in life, it truly is. At that point in time, all that you have learned here will compound. I'm confident. And working towards establishing a stable career, the temptation to chase money through trading to improve my financial situation feels like a foolish idea. Again, I do not know it. The idea is not foolish, it's how you execute it. So let's just say the whole objective of these YouTube videos is to sort of create a anti-foolish movement, that let's not be foolish, let's just be clear of what we are going to do in the markets, being fully aware that the markets don't have to do what we have planned, but we are ready if our plan is called into action, and we will bear the consequences, and those consequences will be known to us well in advance. And whether we are foolish for thinking like that, for doing like behaving in that manner, I'm not too sure about it. What other choices do you have if you really want to get wealthy? You can't set up a factory, you can't set up a shop. What are your choices? So trading is one of the few choices, other than perhaps online teaching or maybe providing service. I think trading is one of the few choices that individuals have. It's very difficult to set up an economic model based on the financial situation that clearly you have outlined. We often fail to recognize our reality. This is true. We convince ourselves that we can succeed because we think we can read chart and understand patterns. It's not only because we can read charts and understand patterns, but it's largely because we feel that in order to make money, someone has to lose money, and because we are in general smarter than the average, that we are more likely to make money. And then when we realize that the what we were thinking average to be as 50-60%, actually that is close to 98-99%, then 99% of them are not going to make money. And so for example, scoring 40% in maths is obviously challenging for some people, but if you just go through the basic exercises given in the class, you're most likely going to get that. Scoring 80% would require application of thought and the ability to solve some difficult problems. Scoring 95% would really require a lot of practice and a great understanding and depth of the subject that you're solving. But to score 100% and then to do that consistently, or 99% and then to do that consistently, the gap between that 99% 100% student and the 95% student on numerical terms just looks like 5 units, but in reality it is almost it could be several thousand times actually, which marks cannot measure because they have a cap of 100 marks on the highest end. Sometimes I overlook the fundamental challenges of what I'm getting into. Trading keeps our hopes alive and lures us into continuing, as it is hard not to trust my intuition. Not following my instincts feels like a challenge to my existence and decision making in other areas of life. It is true. Basically, whenever you learn something new, and then when you have to unlearn it, and similarly, if you are learning something new and if you have to apply it, it truly makes it difficult to carry on with your life in the same manner. When I took a mentorship class with Upsurge just a couple of maybe a month or so ago, I said that I had joined a ballroom dance class at the age of, I do not know, maybe 19, 20. For reasons guys join those classes to dance with girls. But it was my bad luck, maybe, that I ended up finding a real professional ballroom dancer from Poland. And this person would, the minute I would get into the frame of dancing, they would say your toes should be at this angle, your knee should be at this angle, your weight should shift like this, and everything. And the simple 1 2 3 count, he would stop me maybe 10 times, 20 times. By the end of that exercise, I don't think I learned ballroom dancing, but I certainly know that I almost forgot walking. I mean, the impact, because it was so corrective. I do not know what benefit it had, but I definitely gained a finer appreciation of how tough actually dancing truly is. And I think I never really tried anything like that again in my life. So yes, so when we learn something new, it does happen. We find ourselves stuck. What I understood is that to trade successfully, one needs to have a probabilistic, well-researched strategy in place. I wouldn't say like probabilistic, yes, well-researched over time. So the longer the period of time you spend on a single strategy, by virtue of exposure, it is going to get better researched. And backtesting is just the ability to prepare for the volatility that is going to come your way. My point being that you don't have to be a great trader, like absolutely killer mathematical model, to be a profitable trader. If you just do the basics, you're going to be okay. That is, have a clear stop loss and have a clear plan. Now, that stop loss and that plan can be improved, but if you're not doing this only, then, and this is what 98, 97, 98% people are not doing, they simply don't enter stops. Obviously, they don't stand a chance. I don't think so they stand a chance. And it's because there are so many, this is why I also feel like I get drawn to trading, because I feel there are so many people who are just not doing the basics. It should be reasonably easy to take money from them. I think that, okay, if the market becomes very difficult, if it changes its trend in multiple time frames simultaneously, it corrects 5, 10, 15, 20% in a month, of course those will be the months where I will pay, or those will be the quarters where I will pay money to the market. But by and large, I think that when the market is standard, ranging, I think discipline is a huge edge over an extremely good strategy. An extremely good strategy without discipline is almost like driving a phantom Rolls Royce without adhering to the rules of the road. No matter the car, you are most likely going to damage something. With predefined limits for losses, this is of course essential. Additionally, it's important to have a stable source of income so that personal financial obligations do not interfere with trading activities. I don't think it is important. I think it is a necessity. It is a necessity. This is not important. I think I would add here, it is a necessity. There is no question. There is no question. In fact, if you all have actually checked the video that I had with Kunal on Upsurge, there I told him that I have allocated a lot of my career earnings in debt, and those debts are not FDs, those are GSECs, because I need that 100, 200, 300 rupees every day, every week coming from something into my bank account. I need that. Whether I use it or not, it is not that much of a problem, but I need to know that money is coming into the account through something. And recently I have obviously purchased some real estates, and I'm hoping that even they will be positive cash flow for me. So it is not important. I think important is an understatement. So I agree, important, but I consider it as a necessity. Trading requires discipline. Yes, it requires discipline, just like how driving and skating and swimming requires discipline. It's not a big deal if you are clear with your standard operating procedure. If your SOP is defined, then being undisciplined becomes difficult, like if that is a word. Like it becomes difficult to break your rules now. So for example, I might be highly bullish on a stock, but if it's not meeting my system, I'm not even thinking that I'm going to trade that stock, because there are so many pieces of information that are missing that will help me complete that trade, that there is not that it is almost, I think it is close to impossible that I would be behaving on that. And the ability to remove emotions from decision making. You could, so obviously emotions are involved. So when I lose, or when I make, let's say 10 lakhs or 50 lakhs, emotions are definitely involved. How to remove them? I don't remove them from myself. My stop losses are already placed, and if they have targets, those target orders are already placed. And once I place the order, I don't change them. Like, that's the patthar ki laki. Like, I will not change them unless, of course, there is a gap and I'm forced out of it through some other out of normal circumstances. Regarding my trading experience, I didn't lose a significant amount of money, but whatever I did lose over the past year still matters to me. The good thing is that clearly you have learned a lot, so you have not wasted money. Now, this learning is obviously articulated in the form of psychology and philosophy. If this similar depth of learning you also have in certain aspects of the technical, in certain technical aspects of trading, for which you don't need to actually spend more money, I think you could just for academic purpose, just for academic purpose, continue to learn it. Because like I said, like what we had discussed earlier, that your difficulty, your struggle to covering basic expense, this is a phase of life. This is rarely going to be the theme of an entire life. It's difficult to imagine that. It's difficult to imagine that someone who can articulate thought like that to have that as a permanent phase in their life. I've seen far dumber people do much better, and it's by dumber I mean dumb for the job, not objectively stupid. So I do not know. I think that the minute you find something that you like, you're going to do reasonably well at it, and at that point in time, the technical aspects of trading that you would learn might not necessarily translate you into making you a trader on the hourly time frame, but it could make you a monster on the weekly time frame. Who knows that? See, my point has been to all students that just get out of this whole I want to make money from FNO thing. You should be focused on I want to make money. I want to make money from the easiest possible thing, and I am telling you markets are very tough, so you should focus on what is easy. And if equity trading is much easier than FNO trading, then why not try to be the best possible equity trader there is? Because I'm confident that the best equity trader in the country is not a poor person. They could be maybe tens of thousands of crore worth. So be the best equity trader in the country if that is what your current financial situation permits. This borrowing and trading, using MTF or taking a personal loan and trading, these are all very stupid behaviors. This just sets back everyone. And of course, you haven't done that. All you did is that you, from at least the sense that I get, is that you were an individual who came into the markets, active FNO markets, a bit before your time. Perhaps you should have been maybe if you don't have liabilities or something, then maybe you should have been via a national pension scheme or a PPF. That's how you should have been. You should have been in the market indirectly, but of course you got in directly and you got into leverage directly. So that's a tough combination. Anyways, those few devastating trading losses cause considerable stress in managing my finances. So let me just tell you a little bit about losses. So I started trading in 2015, and the first time I think I ever booked a loss in any financial year in my life was in 2022. And everyone would know the recent fall that the market we have seen from 26,000 Nifty to 22,000 Nifty, and how everyone is saying that it was a difficult event, and even I am saying that it was a really tough event for long traders, etc. I can assure you that the fall of 2021-22 was far more severe than this one. First of all, in absolute percentages, the fall was far sharper. And while Nifty has just been into this corrective phase for the last 4 to 5 months, the Russia Ukraine phase, the market went into a corrective phase for nearly 15 months. So not only was the extent a little bit more than what we are seeing now, that is, the price correction is a little bit steep, also the time correction was quite a bit more. So 2022, in my opinion, was far tougher to trade than 2024-25. The reason, and both the times, 2022 fall, of course Russia Ukraine was there, and in 24-25 we know there is Israel and Hamas that's ongoing. But in both the cases, in the 22 phase, they had raised STT from 0.1 to 0.01 to 0.0125, and in this time they have changed it from 0.0125 to 0.02. Both these cases, I believe that the market falls have been forced onto the market. It was not necessarily supposed to be there to that extent. Even if you remember that in March 2023, Madabi Butch, the SEBI chief, came on news channel or on a press conference to say that she feels that the small cap index valuations are very high. She feels that. Now I don't understand. I mean, who is she to feel that? You know, what expertise do you have on this subject? How can you, as an individual, I can say I feel the markets are highly overvalued, or I could say that the markets are highly oversold as an individual. But if I am the head of some institution which is directly connected with the markets, there certainly has to be some protocol in which such an individual cannot talk about market pricing. And she spoke that, and the market tanked. And in those 15 days, once again, I remember giving away a lot of my gains. It was a good financial year, and just like that, it became an average financial year in 2023. But fair enough. So a point being that whenever we lose, so 2022 was when I basically booked my first real losing year. I didn't just lose on money. I actually lost on a lot of things. I lost friends. I lost family members. Some part of health, mental peace, respect, a lot of things that go once you lose. So the finance part of it, trust me, is the easiest part to manage. So if let's say you've lost 5 lakhs, 10 lakhs, 20 lakhs, I don't know, I just want to say that it's the easiest thing to recover. The finance bit will be the easiest thing to recover. The other things, the relationship, the health, the time, opportunity, these things are the ones that are going to be permanent in nature. So if you're only struggling because of the financial aspect of it, that you have gone and done something which has set you back financially, that struggle in most likelihood is going to be short lived, and you will recover and you will bounce back better. After experiencing a substantial loss, I had to pause trading because I couldn't reload my trading account. That's obviously, I really would suggest, just go through something on money management before doing that. It's not about just putting 50,000 rupee in your demat account. It is about assessing your historic behavior and choosing an optimal account value that needs to go. Let's say the optimal account value for you is, let us say, 7.5 lakh rupee, and you have surplus 50,000 rupee. Just quietly park it in a mutual fund or in a PPF or in a national pension scheme, and wait till it becomes 7.5 lakh. Then this kind of responsibility is needed. I completely will say that. If you want to make money quickly, always remember that you cannot stop a secure income source in order to create a speculative income source. A speculative income source is created over and above a secure income source. That has to be there. So when I talk to traders who say I'm planning to quit my job for full-time trading, I feel like telling them that you are simply planning to quit your job, and you're just adding that statement there for full-time trading, because full-time trading doesn't require only that you quit the job. I mean, so there are two different statements which are just getting clubbed in one sentence, and the individual is articulating it in that manner repeatedly to themselves, and because you're not going to be gainfully employed through trading. Anyways, this situation forced me to reflect on my mistakes and analyze what went wrong, which is reasonable. As of 25, I've stopped trading altogether, but I believe that. So just look at this. This is the love for the subject. The individual has obviously stopped trading altogether, and yet the individual is on a YouTube channel that is actually giving out some system or some trader, because that is the thing, because that's the love for the subject. And this is what people need to understand, that this person is unlikely to be some sort of a criminal or a drug addict or a gambling addict. Is a reasonable person who loves trading and loves how trading makes the person feel. But by raising the barrier to entry, see, if in the US we can have 0.01 as a lot size, I don't understand why the hell we can't have that in India. I just don't understand that. you know, these massive lot sizes, these ridiculous margin changes on the day of expiry, these are really the number one reasons. And what is the settlement agency doing actually? There is a security which opens at 100, your stop loss is at 98, that security makes a low of 96. Then how is it possible that when that value of 98 is traded, there is no settlement happening? How can a stop loss skip and there is not a damn authority which takes responsibility for this? The cost of not being able to settle despite putting a hard stop loss, how is it that the trader has to bear it? Who's taking responsibility for this? You see, it's not just about your skill and the fact that, let us say, for example, you are struggling to meet your expenses. I don't understand, if you are allowed to take one share of Nifty on leverage, that is, if one share of Nifty costs 25,000 rupees, and in order to take that one unit of Nifty, the exchange says you please put 2,500 rupees as margin. I means, and if this will allow you to do it hundreds of times, and you're actually telling me that a person will do something hundreds of times and not get better. The problem is not that Nifty trading is bad. The problem is trading with 75 quantity Nifty, that is picking up a default position in which the position value is almost 20 lakh. To force someone to take a 20 lakh position in order to better their own finances, this is ridiculous actually, and this is where Indian traders are being let down by their regulators. Because the regulators, along with mutual fund companies who want to sell mutual funds and direct equities, are busy belittling, ridiculing, and condescending professional traders. कि trading से तो पैसा बन ही नहीं सकता, and anyone pursuing that is a duffer. So the person who is, first of all, the individual goes through a huge financial setback relative to that person. And then on top of that, the person goes through societal shame. It's not easy. This becomes very, very difficult. Even 10 years into trading, I still struggle to tell people what I actually do. When I had to buy the house that I spoke about, I wouldn't get a loan. So it's I would get the loan against the security, that is the assets that I held in the demat account, but not against the profession that I have. There is no support, and we pay what? We pay 30% tax on the profit, and we pay half of the profit already in STT. After doing all of this, instead of हमारा सत्कार होने की जगह, basically we are shunned by every financial institution. So it's not about you. It's basically the environment has been unnaturally made difficult, and I don't understand this why. I don't know why. So as of 25, the individual stopped trading, but learning will never end, which is what we spoke about. My top priority is developing a trading strategy. I think your top priority is to secure your income source, clear of any liability, be adequately funded, be at a well position in life, and by then to develop a trading strategy and implement it. And I understand this may take months or even years. Actually, this might take you a few minutes also. Believe it or not, it could take you like say 10 hours, maybe 15 hours, 20 hours. It's not that tough to come up with a trading strategy. It is being able to do it day in and day out, day in and day out. This is the difference. You'll start creating records, you'll start creating Excel sheets, you'll have to track them. You see, then, because everyone right now, all the traders and all individuals who are approaching this subject teach trading as you enter and then you exit. You enter, you exit, which means they look at trading as a discontinuous process. One trade is not connected with the next trade. This is how they want you to believe. But I can guarantee you that even if there are two different systems, if the trader is the same, one trade is connected to the second trade. Both the trades will be connected with one another. So and because we are not learned to think, we are not designed, or we are not thinking in the fashion of continuation. We are not thinking about iske baad kya hoga, iske baad kya hoga. We are not thinking along those lines. We are so focused on that one trade, on that one entry, that one exit, that we get too myopic and fail to see the bigger picture that is associated with trading. The idea with trading is not to flawlessly enter that one trade. The idea of trading is to generally enter at well defined values with justification, some sort of justification, book targets where there are mathematical justification, trail stop losses with mathematical expectations, and exit means as a hypothesis of failure. This is the process of trading. This whole I found a hammer pattern or I found a candlestick like that, and these are very this is literally like a surgeon saying that I found the right scalpel or the right incision instrument. That instrument is such a small fraction of the overall process of becoming a surgeon. So the good thing is that you believe it might take years. I believe it will take hours. But as long as you are willing to wait years, I believe that you should wait those years for financial stability, because someday you're gonna grow up, have kids, if not already. Uh, you'll have to see it according to that, and maybe who knows, maybe you've reached at a really good position in your career. See, you have to serve society. You have to serve society in a manner that is consistent with your balance sheet. And if you are serving society well in the profession that you have taken up, then what's the problem? It's very difficult to make like sick amount of money trading extremely short time frames. Extremely short time frames is only useful for learning how to trade. Lastly, I want to express my appreciation for your videos. I would like to express my appreciation for your comment and the many comments, like many very well written comments, because many people are writing it in English as a third language for them. So I sincerely appreciate them doing that and watching the channel. I have chosen to speak in English because it makes it easier for me to be legally correct in English, because I'm a SEBI RA, and it is so easy to file a case against an RA. And there are YouTube bloggers like Digital Blogger and others who run ad campaigns to, they're just waiting for some RA or some IA to make a mistake here or there, and just according to them, they are sort of uncovering a scam. So it helps me to be legally accurate, and that's the reason why, because I'm trained in English as a process of my education. So I speak Hindi at home, I obviously speak Dogri at home, but the language which would be like, if I had to defend my life, I would choose a language in which I have studied for many years, and that would be English for me now. You present the truths and fact as they are, or let's just say my version of them, and I keep learning. I just want to make it clear, it's my version of truth and fact, and we will both appreciate that I can be entirely wrong. But at the moment that I'm making those comments, I don't believe I'm wrong. That's just what you mentioned earlier in your own this thing, which is exactly what viewers seek. I'm not too sure if viewers seek this. If viewers were seeking this, there wouldn't be 200 views, I think. I think so, from someone with significant experience in the field. So I appreciate you taking time out for mentioning that, and in general I appreciate you for your comment, and I hope that through your comment, because it is so well written with paragraphs and nicely done, I have hope that with this in a way, having a social conversation with you, and not specifically with you, because I felt that this message touches base on many things, and it becomes a little easier for me to explain this to other traders also who might have that. So anyways, I'll just share the chart today as we see on Nifty. So once again, we will have, I'll just remove the RSI, we will have ADX at 62, which means this is obviously a bullish strong trending security. We have the 20-50 moving averages. We can see that the 20 period moving average, which I will mark in the usual style in the blue line, is at 23,570, and the 50 period moving average is at 23,115. We would obviously want to buy the option, and in order to buy the option, we are looking at the average true range to determine the SL, which is of roughly 90 points. So which would from 23,120, it would be somewhere around 2340, maybe 23.0, or I'll just make it 23.025 or 30, wherever this stops, just for an indication on where our SL is, which is going to be a red line. Obviously, if you're going to choose 23.25, then our trade plan will be fairly simple. It will be to long the 23,000 CE, and we know as a single time frame trader which values that CE would be longed. If you are an trader who's willing to already calculate this in advance, this is at 570 and your SL is at 23,025. So for all practical purposes, this is a 500 point SL. Nifty lot size is 75. 500 point SL is going to be a 37,500 rupee risk on one lot on a future. So in other words, because you're going to be going an in the money option, it would not be maybe 37,500 for you, but it will be pretty close to that value. So it's an expensive trade. So if you do not want to go on this value, you would wait for it to come all the way to 23,125, at which point you would have a 90 point SL, and a 90 point SL on a lot size of 75 is obviously close to 6,500 rupees as a risk per trade. Now, in other words, if you were to remove this, or you could choose a strategy, you do not enter at the extreme low point, you simply enter at a mid value. So I'm just removing this line here. You enter at a mid value and you enter both your lots at this single value, which is also a possibility. But what are the consequences? A trader who's entering on the 20 period moving average is most likely going to get called into the market tomorrow. And in general, this trader who's entering on the 20 period moving average is going to see higher participation in the market. The trader who only enters the 50 period moving average is going to see fewer participation in the market. The next thing is that the trader who's entering only at the 50 period moving average has a very close SL. The SL could trigger immediately because it is just 1 hour ATR. If the market moves a full hour against you, it will move 90 points and your SL will trigger. So it doesn't have to be 90 points in just 1 hour. It could move 90 points against you in 3 hours, but this is our benchmark. So this is giving a 90 point SL. Whereas this, of course, as we have discussed, is maybe giving us a 550 point SL. Because the SL of this trader is wider, the accuracy of this trader will be higher. And the frequency of trades will be higher because he's entering or she's entering sooner. This trader will have lower accuracy, but will have lower frequency. And because the SL is so tight, the risk reward that the trader will get will be huge. So this trader who's entering only on the 50 period moving average should expect a success of 25 to 35%. Whereas this trader only entering on the 20 period moving average should expect success somewhere between 30 to 40%. This is something that you would eventually gain through experience, and that will help you plan these trades. And then, of course, with experience, you will ask yourself questions. Should I take 20 or 50 only? How about if I take 15 and 30? Or simply another set of numbers? Should I have ADX at this value only? Should I have ATR at this value? Should I necessarily go in the money call options? These are all elements in which a trader is going to add flair to the trade that they end up actually taking. But like I said, the plan is going to be very clear. Market is currently closed at 23,670. We are going to enter at 23,570. That would, by we, I mean we are talking from the academic purpose of trade planning. So if you're going to enter at 23,570, you need the market to correct by a minimum of 100 points. A minimum of 100 points in order for your first trade to get triggered. And that also assuming you are very clear that you are the kind of person who's going to enter on the 20 period moving average and exit here, 1 ATR below the 50 period moving average. If, of course, you are waiting for the 50 period moving average, then you will have to wait for some time. And it is possible the market could trade it tomorrow. But it could take maybe 3 days or 2 days for the market to reach there, 2 full trade sessions. And somewhere in between is obviously the value somewhere in between. But under no circumstances can you enter the market without clarity on where you are exiting. Under no circumstances can you enter the market without the clarity on direction and the contract that you're going to trade. Those who want to trade options, my recommendations for tomorrow would obviously and in general would be the 23,000 call. And those who trade futures, then obviously the futures trading is slightly easier, and because it is easier, that's why you will often see me do it, other than the fact that it's more liquid, etc. Future trading is slightly easier, so logically you can directly take these values and place it into the market. So with that, I hope today's video has helped you all in some way, and I wish you all the best for the remaining week of trading. Thank you.